Hi everyone, welcome to episode 2 of this Learn on the Go series where I try and capture my learnings over the previous week. Now, investing has always been a speculative activity. We're always trying to figure out what the stock price will be a month from now, 3 months from now, a year from now, and everyone has their own way of doing it. Someone uses technical indicators, someone's doing fundamentals, someone's using astrology, and someone's doing it on faith and prayer. So everyone has their own way, and hopefully today I can use the simple combination of EPS P ratio to figure out what the future stock price is. And I'll be doing this with the help of certain practical examples and also a case study so that this point can be put across properly and can be very useful for you in the future. Right, so at least for me, the future stock price is nothing but a function of the EPS being the earnings per share. And a simple way to understand this is to go to trendline.com. Uh, just look for Nifty 50. There we go. And then tap on Nifty 50 EPS. This gives us a graph here where the pink line represents the Nifty EPS, which is nothing but the weighted average of the net profits of different companies which comprise within the Nifty 50. Now, on a 1 year basis, there's not much one can look at. There's no kind of visible pattern here, but once I click on all and we look at it over a long period, one can see that the Nifty 50 and the Nifty 50 EPS, they seem like mirror images of each other. The point I want to stress here is that the Nifty 50 is nothing but a function of how the Nifty 50 EPS operates. And there's even a saying there, right, which says that the stock market is nothing but a slave of corporate earnings. And this need not be only for broad market indices like the Nifty 50. It's also applicable on stocks. So let's try a couple of stocks. Let's go to Screener and let's take some popular ones. Take Dixon Technologies. Okay, Dixon Technologies is right now very expensive. But look at it, just to right size our thinking, just to put our thinking into the right frame of mind. Dixon was at 3,600 some 3 years back. It's now at 15,000. So that's what, about 4 times, right? And now let's look at the P&L as well. Let's see how that has moved, the EPS especially. So the EPS in 2000 for FY22 was 32 rupees. It jumped up to 42.61. It's now at 181. So what's 181 divided by 32? I think it's about 5.5 times. So yeah, so just like the price has jumped up from x to 5x, even the EPS has gone up from x to 6x. So it's kind of following that pattern, that as the EPS has gone up, as the EPS goes up, so does the price of a stock. So again, I go back to that same logic which says that the stock price is nothing but a function of the EPS, the earnings, the net profits per share that that particular company generates. Right, so if this part is clear, this formula can also be extended to say that the stock price is nothing but the EPS multiplied by the P ratio. It's a very simplistic kind of a formula here because the P ratio itself is nothing but the price of a stock divided by the earnings per share. So you can cancel these out and you get the stock price. Let's extend this further, and obviously the future stock price is nothing but the future EPS multiplied by the future P ratio. To give you a better understanding of this, let me take you through a case study right now. All right, BlueJet Healthcare. I'm sure you've heard a bit about this company. It comes in a lot of Twitter threads where they're talking about CDMO companies. Okay, I'll just take a couple of minutes here to give you a background of this company. So it's a very old company. It started more than 50 years back, and in 1970 is when they started their manufacturing operations. They were producing high intensity sweeteners, so saccharins. They did that for a number of years, for 3 decades actually. And in 2000, they got into the contrast media market. I'll explain in a minute what contrast media is. And in 2002, they started manufacturing pharma intermediates and APIs. Over time, they added more and more units, Ambernath, Mahad. And if I'm not wrong, they came up with an IPO in November of 2023. Let me take you through the products as well. The first business segment is contrast media. They manufacture the intermediates for contrast media. What is contrast media? Well, so anyone who goes through a CT scan, an MRI scan, etc., there is a dye which is injected into our bodies. So the reason why the medical officer does that is because it becomes a lot easier to scan the body if you have that dye moving around here and there. The image comes out pretty good. And that's what contrast media is. So what BlueJet Healthcare does is they manufacture the intermediate for that, and then they pass it on to some other manufacturer, which is probably a GE Healthcare or someone like that, who then kind of converts it into contrast media and uses it in these MRI scans and CT scans, etc. So they've been into this business for around 25 years now. It's a very stable business for them, but I would say that it's not a growing business at all. It has grown by only 3.4% over the last 4 years, which is not that good. The other business that they have is the high intensity sweetener. Again, a very small business for them. Uh, Again, very stable, does about 120, 130 odd crores for them on year basis. Nothing much to talk about. And then you have the pharma intermediates and API business, which is where the growth is coming from. And if you look at how these three segments have proceeded on year basis, till FY23, it would seem as if contrast media is their primary business. And it was until then, right? With 500 crores out of 700 coming from contrast media itself. But see what happened over the next 2 years. So while contrast media stayed where it was, even same with high intensity sweeteners, it's the pharma intermediates and API business that really jumped up. So from just 34 crores in FY23, they've closed FY25 with some 462 crores. So BlueJet has been doing a lot of work with their pharma intermediates and API category, especially in three areas: cardiovascular system, oncology, and the central nervous system. They have a complete R&D system. They're working with multiple innovator companies. Even amongst the three, cardiovascular is where the growth is really coming from. And notice that line where it says the prescriptions have grown by more than 60% of the last calendar year. I think very specifically, the management here is referring to Esperion Therapeutics. Just to give a quick background, now Esperion Therapeutics have this two drugs, Nexletol, Nexlizet. Okay, these are oral medications which are given to reduce your cholesterol levels, which therefore reduces your cardiovascular risk. And the best part is that it does not give the side effects which are very common to what was earlier used, which is statins. And statins were prescribed since the 1990s onwards. So this is a new drug in the market, and it's been doing very well. 2023 to 24, there's a jump of like 185% in terms of revenue. Their losses are definitely coming down. It's an innovator, so obviously it'll have a lot of losses in the initial years, but now those losses are coming down as the take up for their drug is improving. They've gone international as well, and you can see this growth chart, right? What was not even 100,000 patients in January of 2023, within a couple of years it's gone up by some almost 5 times. So there's a lot of good take up for this particular drug, and as long as Esperion does well, uh, BlueJet Healthcare should also do well. At least that's the theory behind it. So this particular thing I've given you here is not some research report that I've created. It's not as detailed as what you might find elsewhere, but I would definitely be kind of connecting with what we have learned with our core subject for the day, our topic for the day, which is to be able to estimate future stock prices. So don't take any of this as some recommendation or anything. Actually, we're only here to learn. And let's go back to the screener. Right, so I hope you recall there was a massive jump in the sales in FY25, right? So there was this jump from 712 to 1030. A lot of it happened because of their big moves in pharma intermediates and API. That particular segment did extremely well. Let's look at the quarterly data, and that's where some really nice clues actually come out. Now, I want you to focus on from June 2022 until September of 2024. It's a good 10 quarters, and the sales have been in that narrow band of 140 crores to 200 odd crores. But then in December of 2024, so Q3 of FY25, something happened and the sales went up by a good 50% on a quarter-on-quarter basis. So that's a massive jump from a sales perspective. And not only did the sales jump up, even there was a big jump in the operating profit margin, and obviously the net profit went up from 58 crores to 99 crores, which was a big jump in the EPS also. So actually, if you look at the EPS in Q3 of FY24, there was 1.85 had jumped up to 5.71. So that's a 3x kind of a jump. And they kind of repeated that performance in March of 2025, and the EPS is at 6.37. So 6.35. So that's again about 2.8x of where it was exactly a year back. So these are big jumps in the EPS. We know what exactly happened there. Their move into the pharma intermediates not only increased their sales, but also offered better profit margins to the company. When we examine this from the perspective of calculating the future stock price, we do get some clues here. So 99 plus 110, that equals 210, which is the cumulative net profit for the last 2 quarters. So let's assume one thing. Let's assume that there's no growth that happens in the company in terms of the profitability. So 210 multiplied by 2, that comes to 420 crores. So that's our assumption, right? So it's a forward 6-month assumption that this company will do 420 crores of profit over a single year. And if you take 420 as the denominator, so in the numerator, you have to take the market cap of the company, right? So the market cap is right now 14,563. So let's pull out the calculator. Okay, so what do we have? We have 14,563 divided by the projected profit of the company, which we've just calculated it to be 420 crores. This is for the entire year. So this gives us a PE ratio of 34.6. And what's the current stock PE ratio? It's currently at 47.7. So there's a nice delta of around 13 in terms of a PE ratio. At least that's what the math tells us. And you can even check this out from an EPS basis also. So let's go back to the where's the EPS? Oops. Yeah, sorry. Yeah. So it's 5.7 plus 6.3. So BlueJet Healthcare has done over the last half a year, it has done 12 rupees of EPS, earnings per share, and you multiply it by 2 like we did for the profits. So 12 into 2 comes to 24. So it's an assumption again, nothing is guaranteed. We're just speculating here. So it's an assumption that over a 1-year period, out of which 6 months are already done, so another 6 months, BlueJet Healthcare would do about 24 rupees of EPS. And let's go back to the stock price. It's currently at 839. Okay, it jumped up a little bit today. So 839. So let's do this. 839 divided by 24. That's what our future EPS came out to. This comes to 34.9, right? So that's another way of doing it. So one way of doing it was using the market cap. So you do market cap divided by the net profits, or you can do the price, the current price of the share divided by the projected EPS of the company. But anyway, my point is that this simple system can help you see discrepancies between what the current P ratio is and what the future P ratio can be. Now, I'm not talking about the future P ratio maybe 2 years, 3 years down the line, but if the assumption that I've put forward today works, that is, the company maintains the same growth rate as it has seen over the last 2 quarters, if it just maintains that number, then you are probably going to see the P ratio come down, at least from the current price it is. So two things can happen. Number one, the P ratio can come down from, let's say, a 47 to, let's say, a 35. That's one thing that can happen. Or the second thing that can happen, which is where the future P ratio part comes in, is that it's possible that the P ratio might remain where it is, or it might come down, it can even go up. And this can lead to further change in the prices. Probably what I'm saying doesn't make sense. So let me kind of show this with an example. Okay, let me pull out an Excel sheet. So the current P ratio is 47.7. Your current price, how much was it? 839 or something. Yeah. Now you got to make certain simulations, right? So we have to estimate what the future PE ratio will be. So it can go down to 35, it can be 40, it can be 45, and let's say it can be 50, right? So any of these things are possible. What's your future EPS estimate that we just made? Sorry, EPS estimate is 24. Yeah, that's what we said. Now, what did we say a little earlier? We said that the future stock price is nothing but the future EPS multiplied by the future P ratio. So the future stock price, and again, guys, this is all just a prediction that we're trying to make. So 35 multiplied by 24. Yeah. So this is according to different P ratios, what and obviously if our estimate of EPS is correct, these are the different stock prices which are possible. So what this currently tells us is that per the current stock price of 839, what the market is valuing BlueJet Healthcare in terms of a P ratio is probably 35. Okay, so there are two things that can happen. Number one is the market might say, no, 35 is not the right number. Probably it should have been 40. If BlueJet starts getting priced at 40 or 45 or 50, then there is a upside opportunity that comes in. Of course, if the people say, no, no, it should not be worth 35, it should be worth, let's say 30, then obviously this number goes down. So, this is how you actually understand in a very simplistic basis, back of the envelope basis on how future P ratio and a combination of future EPS can lead to your future stock price. I hope this part is clear. I was not planning to do any of this, but yeah, it made sense to kind of explain it this way. So again, what you can do is if you divide it by this number subtracted by 1, you can get, let's say, let me use the word potential upside. Okay, so as I said, at a P ratio of 35, it's like nothing, it's par for the course. 14.4%, 28%, 43%. Of course, all this is nothing but speculation. Please do your own research. I am not doing any kind of recommendation or any kind of research here. It's just a simple theoretical exercise to help you explain how one can calculate the future stock price. So I also want to talk about something related to the P ratio. Now, one of the simple ways in which we look at P ratio is to do a relative comparison. That is, we try and understand where other companies, comparable companies are doing, so where they stand as far as the P ratio. And in the case of BlueJet Healthcare, we would want to look at some companies. So Laurus Labs is at a P ratio of 90 currently. Uh, let's look at more. We have Eris Life Sciences, which is at 60. OneSource Specialty 248. Wow. Um, what else? BlueJet, we've already covered. It's at 47. Newland Labs, it's at 70. Amy Organics is at 60. So 60, 70, that's where most of the companies are, which kind of gives you a hint as to where you ideally want BlueJet Health to be. Of course, I must say that there's a reason why certain things are priced higher, priced lower. Uh, One has to really look into all these things before making up your mind. But I hope this comparative relative analysis also gives you certain clues as to what you want the future P ratio of this company to be pegged at. Now, there are instances, and it's becoming more common nowadays, that the number of shares, the share capital of companies have been increasing. How do they increase? They increase via a rights issue that comes in, or some kind of a preferential allotment, a QIP. All these things keep on happening, or warrants can be issued to promoters, etc. So these are ways by which the share capital of the company increases, and this also needs to be factored when looking at EPS calculation. So in this particular case, in case of BlueJet, uh, a kind of an anomaly here is the promoter shareholding. So if you notice this, it's at 68% right now, And remember, I told you the company got listed in November of 2023. And the SEBI rules say that you have 3 years within which you have to bring down the shareholding from whatever it is to 75% or lower. So promoters have to bring down, in the case of BlueJet Healthcare, they have to bring it down by 11%. And one of the techniques that these guys are now employing is by issuing a QIP. And the QIP approval is for, let me see if I can find that. Yeah, this one. See, approved FY25 audited results, recommended dividend, proposed 15,000 million. So that's 1,500 crores in terms of fundraise. So they want to do a QIP of 1,500 crores. And why is it exactly 1,500 crores? I have a theory behind it. See, the current market price, the current market cap is 14,000 something. So when you do a 1,500, so the dilution is somewhere around 10, 11%. That's the kind of dilution that one can see. I'm sure the promoters are not going to participate in this particular QIP. So when you have that dilution of 11%, it takes care of the gap between this current promoter number of 86% and the 75% where they need to be by October of this year. So they don't have a lot of time. They have barely 4-5 months to kind of finish this activity off, and that's why this QIP has come in. How is it important for investors like you and me? Because this dilution will reduce your EPS. So if the profit remains where it is and your share capital goes up, then obviously your EPS comes down. So it's a point that one has to take care of, at least in the case of BlueJet and any other company that you research in the future. So I do hope you found this session useful. It was a complex topic of trying to find the future stock price of a company, but try to simplify it using the future EPS of a company. And we use the example of BlueJet Healthcare to understand how you can actually predict with a certain level of confidence as to what the future EPS might be. And the other variable we used was the future P ratio. So I personally feel that a combination of these two variables is actually enough for you to understand what the stock price can be in the future. And yeah, if you put this into practice, if you try out more companies, I'm sure this will become a part and parcel of your investing framework. So wish you the very best, and I'll see you next week.